everyone. Thank you so much for taking the time. Here we are at the end of the year, our final annuity training webinar. So number one, I want to thank you all for taking the time and hanging in there with us over the years. In fact, we were just talking offline on how this is our best year when it comes to annuity sales in our history since 1972. So we're very, very proud of that. And we always keep in mind we could never do this without our agents and agencies. So I want to take my hat off to each and every one of you. If you're listening to us live or you're listening to this in a couple of weeks when we send it out, thank you so much once again. And always keep in mind, too, that you always hear us speaking about our donations, our charitable events, and giving back. And we're only able to do all of these great things because of our agents. So again, it's a team effort. And I'm going to share what we did last weekend with Toys for Tots as well. So we're very proud of this stuff. I think it's all about giving back at the end of the day. So I absolutely love being a huge part of the sponsorship team when it comes to the different charitable organizations. So let's move forward. What we're talking about today is obviously our annuity department. And yes, the growth is amazing, right? But if you're newer to us or you've been with us for a while, maybe you're a newer agent on the annuity side, whatever it is. Okay, number one, we have something for everyone. Okay, and when I say something, when it comes to lead programs, E&O insurance, carrier and product selection, resources for marketing. If it's just picking up the phone, right, and you want to run by a certain scenario by Josh or RJ, right, no problem. If it's about licensing or it's about an education module, right, with questions, and Ashley K is there for you, whatever it is, we're here for you every step of the way, and there's no question that's low enough or high enough on the totem pole. Okay, whatever it is, we're going to hold your hand through the entire annuity sales process, A to Z. It's very, very important to us when it comes to customer service. So let's keep moving forward. What I want to do next is speak about, if you're an agent out there from Cedar Rapids, Iowa, and you're saying, Bill, you sound great, but what is in this for me, right? What makes you all unique? If we can go to the next slide, Andrew, that would be great. There we go. So what makes you different? What's the ultimate value add, right, when working with Levinson and Associates? And what we're going to run through today is, yes, not just great products and riders and carrier sales ideas, but also things that you can't get from another IMO or BGA. Okay, so make sure you're paying attention. We're going to share everything. The covers are coming off the annuity department today. And I want to make sure, right, we're at the end of the year, we're going into 26, and you know enough to be dangerous. So when you pick up the phone to call Josh or RJ, you say, hey, tell me more about the scholarship program that comes with these 7 annuity carriers. I want to offer this to my clients at no charge. Okay, whatever it is. So please write down notes, use the Q&A pane. You have as GoToWebinar, you have a question pane you can expand or minimize. So jump in with comments or questions as we go. And if not, again, just reach out after we wrap up at 3 p.m. Eastern. Okay, I spoke about giving back. I want to switch gears for a second because you all know how important this stuff is to me. So October, we dedicate to the American Cancer Society, right? Breast Cancer Awareness Month. And then November, we dedicate to Movember, which is Men's Cancer Awareness Month. And then fast forward to December, right? Here we are. It's holiday time, as we know. New Year's around the corner. So we dedicate this month to Toys for Tots. And last Saturday, we sponsored the Toy Rally, which is in South Florida, Fort Lauderdale area. So we also have to bring a bunch of toys, and then it's called the Silver Sponsor. And we do this every single year. This year was a little different. Why? Because we hit a new record, donated over $1 million in cash, over 70,000 toys. Okay, and this is all through Toys for Tots with the Marines. It was an unbelievable day. Okay, and once again, we would never be able to do this without our agents and your clients. Okay. So keep that in mind. We're very grateful, and we know there's no small app or no tough agent phone call or email. Okay, whatever it is, we're going to get through the obstacle, the challenge, to make sure that you're happy at the end of the day. Why? Because if you're happy, you're writing more business, right? We win, the carrier wins. We can do stuff like this. It's a win-win-win across the board. So again, thank you for your participation, to our staff and our agents as well. Okay, let's keep moving forward. And by the way, you'll see a flyer going out about this too. Okay, so what I want to do next is introduce Josh Hoffman, who runs our annuity department for over 10 years now. So I'm going to have him take the wheel and talk a little bit about the industry overview.
Hi, thanks, Bill. One of the things I did want to talk about is the annuity sales trends over the industry, because I think this will give agents an idea of what kind of market this is. And if you look at these figures on the screen, in the first quarter, there was $105 billion of annuity sales, and this isn't unusual. The last 6 quarters has been over $100 billion in annuity sales. In the second quarter, it's 119, and that's up over last year. And the third quarter, it's 225, and the total for the half a year, and that's up 4% compared to last year. And in 3 quarters, it's 347 billion. So if you kind of trend that out to the end of the year, you're talking about a $500 billion industry. And with this amount of annuities being sold, there's a piece of the market for every agent, I think. So that's eight quarters of over 100 billion sales. So if you think about that, it's a huge market. Okay. Want to move to the next slide, Andrew? Okay. And I also want to talk about some marketing ideas for annuities, and probably the best marketing for annuities, especially if you're a life agent, is to try to find annuities when you do your policy reviews, and even if you are currently an annuity agent. Because one of the questions you should always be asking is if they have an annuity over 4 years old. There are compliance rules about replacing newer annuities, and of course, all replacements, there has to be a good reason for them, and that's what I want to get into. Um, if they bought annuities 3 or 4 years ago, the rates are higher now. Some of the income riders have higher factors now, and it really is a good time for them to review and see what else is available in the market. And I think that can really turn a casual conversation into a warm FIA lead. And when you look at the old policy, and this is something we can really help you with, you can kind of show them what's working and what's not. Because what happens a lot of times with some companies on indexed annuities is they may lower the caps over time. And when they lower the caps, you might have a person who's getting great returns in year 1 and 2, maybe getting not so great returns in years 3 and 4, and you can offer them something better. And I think there's been a change in the indexed annuity market in the last couple of years where more companies are willing to either give guarantees not to lower caps or to guarantee a certain floor. Like Equitrust just came out with a product that has a 4% floor, and Lincoln has a product where you can lock in the S&P caps for 5 years. So there's a lot more of being able to have some assurance that caps aren't going to go down, which people in older products might like. And the close, one of the things, we have a lot of annuity training courses, and one of the things they teach you is to learn the language about how to do annuity transfers, how to not make it sound like a sales pitch, how to make it sound like a retirement strategy, because it actually is a retirement strategy. And you have how to guide clients rather than pressuring them. And all these things help, because when people feel it's a sales pitch and they're being pressured, they tend to push back. And also, most of what I just talked about is, for one-on-one meetings with clients. So one of the other things our trainings teach is how to take this process that's usually used for one-on-one meetings and move it to larger venues like workshops or campaigns or even situations where you're not seeing the person face to face, like social media advertising. And there's a lot of FIA opportunity out there, um, because there's a lot of people with annuities, there's a lot of people with 401ks, there's a lot of people with retirement plans and mutual funds in the stock market who may have taken hits in the past and are looking for something more stable. Okay, Andrew, I think I'm ready for the next slide. And a lot of carriers right now are offering incentives. And right now, um, you know, Silex offering a very good incentive, and their incentive actually increases the bonus on commissions based on the length of the annuity term, and um, most of the other bonuses are based on production. Now, if you look at Kuvare, who used to be named as who used to be known as Guaranteed Income Life, and still, I believe they still do market under Gillico. They start their bonuses at $1 million, which in annuity terms is not a huge number. Um, Corebridge starts its bonuses at $1 million also. Lincoln starts theirs at 4.5 million. So if you are an annuity producer, the extra compensation you can get from these programs is very helpful. And some of them aren't $4 and $5 million. Some of these bonuses start at $1 million of production, or like the Silex, some don't require production at all. They just, you know, are limited time for the end of the year bonuses. And I think that's about all I have. I throw it back to Bill now.
Okay, good stuff. Josh, thank you for that. So, yep, I just have about 3 minutes left, and then I'm going to turn it over to our coach, Chris, who is joining us. So, what I want to do quickly is just talk about some bonus bucks, extra ways to qualify for the expo, to have a 2-bedroom suite on the ocean, round trip airfare paid for. Okay, so make sure you pay attention to these slides, especially the first one in front of you right now. This is a simple $100 Amazon gift card for writing your next application with us. Okay, it's that simple. You opt in to our SMS, our text program. Okay, we have a email me form. In fact, we'll include all of this in the thank you email you'll have in your inbox tonight. But again, just with your next application, opt in, boom, you are done. As soon as it places, life, annuity, health, doesn't matter. You get your $100 Amazon gift card just in time for the holidays. The next slide is our annual Agent Expo. Bigger and better than ever is our promise. And I think we do exactly that. And I know in 26, that will be the case. Why? It's because it's our first ever life, health, and annuity expo. Okay, so we're going to have about 13 presentations throughout the day from our top life, annuity, and health carriers, keynote speaker, networking lunch, breakfast on us. It's going to be amazing, right on the ocean in South Florida. And as I mentioned, if you qualify, and if you look at by the way, this is complimentary for everyone as long as you're active with us. But if you qualify, top right corner, right, starting at 40,000, and this is all applications, all premium through Levinson. What we're doing is December double credit month, okay, for the holidays. So double credit month, meaning that the 40 turns into 20, the 70 into 35. Everything is cut in half, and every dollar a premium counts for $2 a premium. So a great way to take advantage of our incentives around the expo coming up April 17th of 26. So make sure you save the date and RSVP, because we are capped at 300 agents per the fire code. And I know we're already getting close. Okay. And we still have about 4 or 5 months. Okay. My next slide, and then Chris will take the wheel, Real fast, I want to go over our top direct annuity contract. So everything is on the left-hand side. What you're going to notice is we have the entire industry covered. And if there is a carrier or product that you do not see, that we do not have, just let us know. Number one, okay, we usually have a contract regardless, or number two, we have something that is as good, if not better, than what you were shown or what your client was shown, whatever the case is. So just let us know. You can reach out to RJ or Josh. Together, they have over 40 years of insurance brokerage experience. Okay, so we have you covered. And then don't forget Michelle on the processing side, and then Ashley K on the licensing side. So a total of 4 Levinson employees dedicated to your annuity business. Let's keep moving forward. I want to introduce Coach Chris. So what I love about Chris, just real quick, I won't toot his own horn. Actually, I will toot his horn. What I want to say is every single quarter, Chris is nice enough to take his time, right, out of his busy days to speak to our agents, not about one carrier and a handful of products, but about the industry overall. Okay, so that's what I love. He's not tied to just one company saying, oh, these are the best, you got to use these. He's going to give us the 100-foot overview on the entire annuity industry and what's hot and what's not. So, Chris, you want to take the wheel?
Absolutely, guys. Thank you so much for having me, Bill, as always.
Yeah, we appreciate you.
Of course, and happy holidays to everyone on this call today. I'm really excited. It's been a fantastic year on the annuity side. And as I know we always have a big mix of folks on this call, maybe people who are a little green in annuities, maybe folks who have years and years of experience with it. So I'm going to try and cater to everybody on this call today. So again, appreciate everyone carving out some time here, and for Levinson and Associates for having me as well. You know, Josh stole a little bit of my thunder here talking about some of these LIMRA numbers on total annuity sales. But yeah, you saw the numbers before. You're seeing it right now. Quarterly U.S. retail annuity sales top 120 billion for the first time. I mean, absolutely huge. Not all fixed products. Some of that had to do with RILAs. Some of that had to do with some of those variable products as well. But you're seeing some great things happen here on the fixed side at the same time. And as you can see that number there, LIMRA is forecasting sales to exceed 450 billion in 2025. I've been saying it for years on these quarterly calls. This is the time to be talking about these products, folks. You got the greatest transfer of wealth in history happening, and it's only going to be a better and better time to be in this business. Educate yourselves, use the resources that you have here at Levinson and Associates to help you out with all of this. Since Josh stole my thunder a little bit with that number, I wanted to break it down a little bit here. Fixed deferred annuities were higher, 6% higher than 2024 sales in the third quarter of last year. So you're still seeing strong MYGA sale growth take place. Going down to fixed annuities, you saw a little bit of a dip there with the fixed indexed annuities, which I thought was interesting. But let's take a look at that income annuities piece right there. Single premium immediate annuity sales increased 12% in the third quarter. Single premium immediate annuity sales, kind of a forgotten product there over the past few years. But what I think this points to, guys, is a bigger story, in my opinion. If we're talking about market trends, I've seen a huge growth in fixed indexed annuities with income riders take place. You're seeing growth, as you can see right here, with SPIAs, single premium immediate annuities, take place. Clients are feeling that market volatility. They're feeling that uncertainty. You know, there's all this talk about affordability in the news right now. Things are expensive right now. There's no doubt about it. People are wanting that guaranteed check to come in the mail, right? And that's the beauty and the power of what these SPIA products can do. That's the beauty and the power of what these fixed indexed annuity products with these income riders can do as well. For your retired clients, your clients on a fixed income, it's providing that check that they're so used to getting from that work of 20, 30 years working in corporate and getting that paycheck. They can recreate that with annuities, and you can help them get there. And you're seeing that growth happen there with that single premium annuity, immediate annuity number there at the bottom of that page. So as always, like I mentioned, this is a slide from our last presentation, but you're seeing year-over-year growth, save for the 2020 COVID year. You're seeing year-over-year growth in annuities, and I just pointed out that LIMRA number, that fixed annuity sales should top 450 billion for 2025. There you had 434 billion there in 2024. Guys, that's the story right there. Consumers want these products. They're interested in them. It's no longer a bad word to be doing annuities. It was at one time. I think we all know that. Now folks are looking for this safety. They're looking for this protection. They're looking to be protected and get that guaranteed income that only annuities can offer. So it's a great, great story that you're going to have, folks. And I meant to jump to this slide, but that's what you're doing. You're bringing peace of mind in an uncertain world when you're talking about fixed annuities with your clients. You have an insurance license to protect your clients in the event of death. Now protect your clients from outliving their money. That's what that license gives you the ability to do as well. It needs to be a conversation that you can have. The folks at Levinson Associates can absolutely help you get started. Talking about market trends, looking at 2026, what's going to happen here? I don't know if any of you are seeing in the news, but some regulation changes are probably on the way next year. I really can't speak to any details at this time, but you probably have seen, if you paid attention to the DOL labor rule, the DOL fiduciary rule, excuse me, that they've been trying to put in force here over the past few years. It's gotten blocked when Trump came into office. Well, it looks like they're trying to rework that a little bit into some regulation for next year. Now, what could that mean for you, the agent? Well, if a fiduciary rule comes from the Department of Labor, it could change some ways in which you work with clients' qualified funds. Not so much the non-qualified funds. The non-qualified funds being that money in savings accounts, checking accounts, things like that. But those funds that are in clients' 401ks, IRAs, things like that, there may be some regulation coming into play by the middle of next year. So if I were to say a market trend or something to look out for in 2026, looks like that Department of Labor fiduciary rule is going to be back on the table at the same time. So pay attention. I'm sure the folks at Levinson and Associates are going to have information for you if and when that time comes. So nothing to worry about right now, but we'll just keep our ear to the ground for you. Okay, 3 reasons you should be talking about fixed annuities today, folks. And I think number 1 does come down to that market volatility. Now, of course, this depends who you're talking to, right? If you have that high net worth individual in the market, they might see that top line right there, that number 1. S&P growth in 2025 has been solid. As of today or this morning, 17.44% up this year in the S&P 500. A really solid number. A lot of these fixed annuities, guys, have 10, 12, 13% cap rates to the S&P. You're able to take advantage of a huge chunk of that growth this year while having absolute downside protection at the same time. The value is there with these products, but that's not what we're talking about. The market volatility is a big reason why your clients are looking at these products. Yes, the market is jumping up, but that's if your clients have a lot of money invested. They're seeing those gains. For your middle market folks, things are a little difficult right now. And if things drop in the market, that's really going to affect them. Things at the grocery store are more expensive. We're all seeing it. There's a lot of uncertainty going on with this tariff conversation, how that's going to affect things going into next year. Inflation's been going crazy. Unemployment is unfortunately a huge story that's going on right now, a little bit under the radar, but it's going into some of these Fed rate change cuts that they're making. So it's just a lot of things we need to pay attention to. A lot of these things are the concerns that your clients have that annuities can help protect them from. So it's an amazing, amazing thing to brush up a little bit on what's happening in the news to talk to your clients about. Speaking of interest rate changes, I think we all saw what happened in the news. The Fed just cut interest rates for the 3rd time here just yesterday, believe it or not. So yeah, we saw a 1/4 point drop take place. Maybe a slower pace of rate cuts to be coming ahead, but that also shot the market up quite a bit over the past couple of days. So what does that mean really? Well, since we're on the topic of fixed annuities, you could see some drops there take place with fixed annuity rates, with your multi-year guarantees, with your S&P caps. If you have a client on the fence right now, insurance carriers are a little bit slow to jump on these things. Go ahead and start tying those clients in. If you promise them a 10.5% cap with a carrier, you might want to let them know that this rate drop is probably going to affect that, and they should look to get those funds into that annuity ASAP. Really affects those fixed rates too with the fixed index annuities and those multi-year guarantees. So if you're having a conversation with a client right now, that Fed drop that just took place yesterday is a big reason to push forward with things and get business moving. And folks, number 3 reason, your current book of business is your best lead resource. If you were on our last presentation, I did include this slide in our last presentation because, guys, annuity replacements are still a massive conversation here in the industry. Few reasons why that is. Your clients may have purchased an annuity back in 2018, 2019, 2020. That was a low interest rate environment that we were in. Even despite these rate cuts that have happened, that was a very low interest rate environment that we were in back in let's go back to 2017, 18, 19, 20, 21. You can replace your clients' annuities and get them in a better position with these premium bonus products. You can get them in a better position day one with these premium bonus products. It's as easy as sitting down with a client and they say to you, Mr. Agent, I'm sorry, I already have an annuity. Well, let's review it. Let's take a look at your last annual statement. We may be able to get into a better position. And if you see that that annuity that they purchased was purchased back in 2017, 18, 19, all the way to 2023, there's a chance that you can replace that annuity, put your client in a better position, and make a whole new commission on that product as well. So a few reasons why these annuity replacements are so big. Well, we're in a higher interest rate environment today than those annuities were when they were sold back just 2, 3, 4, 5 years ago. Cost of inflation, big reason as well. There are new products today. Carriers have been able to get very creative with these products over the past few years because of this higher interest rate environment. It's been really fun to watch. I'm going to go over a few of those here in just a moment. And best of all, clients who've already purchased an annuity are in play. That's why you need to be talking about annuity replacements. It's not, oh, sorry, Mr. Agent, I already have an annuity. Oh, okay, well, have a great day. No, now you have the opportunity to talk about annuity replacements with them, getting your client in a better position. For example, you may have a client who bought an annuity in 2020, and in 2020, that annuity may have had a 4% cap to the S&P. You can now get your client in a product with a 7, 8, 9% cap to the S&P, and with a premium bonus to put your client in a better position day one. It's a win-win for the client. It's a win-win for the agent. It's a conversation you need to be having. Look at your own book of business. Pull out the last annual statement. Send those over to Bill or Josh or RJ. Send those over to them, and they can review those policies for you and find the best position to put them in. That's a nice call to action for all of you on this call. Think about your book of clients. Think about people you sold in the past 2 to 5 years. Send those annual statements over. It's an amazing conversation you might be missing out on. All right, guys, so products and ideas to drive your sales. Let's just jump right into this too. Josh showed some of those incentives that are out there. You know, these might be little repeats here, but some things you should know about. Nassau has extended their FIA commission special that they're doing right now. They're doing 75 basis points to you, the agent. 75 basis point commission special on FIAs to you, the agent, through January 16th. They extended that from December 31st. What's Nassau do well at? Well, they do really good income products. They have some of the clearest, easy to understand illustrations in the industry. They've also added a really nice income rider product that reduces over time. So let's say you have an older client. It'll give them a really high top of the market income for the first 10 years, and then it'll reduce a bit for the rest of the client's life. Now, that might not always be what we think about with lifetime income riders, but it's a great feature for those older clients who maybe want to take advantage of as much income as possible for the first 5 or 10 years, and then still get a steady check afterward at a little lower income rate. Something to certainly pay attention to. Then you have an Equitrust premium bonus special there. And then on a product that Josh kind of flirted with there at the beginning, you got a commission special of an extra 1% commission on the Smart Boost Index. We're going to go over that product here in just a moment, but an additional 1% commission on all sales on that Smart Boost Index through December 31st. So some good stuff there. Guys, MIGA rates are MIGA rates. I put these up here yesterday. I tried to include any rate changes that are coming up here in the next week, but there's still some solid stuff here. I looked at my Fidelity account recently. I use a brokerage Fidelity account, and I have like a money market fund. You guys remember maybe just a few years ago, you were seeing money market funds at like 5%. You could just have money, cash, sitting in a money market fund at 5%. I think the Apple savings account was like 5.15% at one time. It was wild, and you could just make that much money by keeping money in cash. Well, those days are gone. Okay, unfortunately, they're gone. I mean, that Fidelity account now is at 3.55%, as I saw yesterday from that rate drop. 3.55%. So if your client has money sitting in money markets and they say they're doing fine, well, look, 3.55. Here, you have a multi-year guarantee rate, a 5-year at Revel 1 at 5.85% guaranteed. Oh, and also you're getting the benefit of tax deferral, right? So your client doesn't have to pay taxes on the gains every single year. They can keep that income, they can keep that money growing and growing, compound interest on top of compound interest on top of compound interest. MIGAs are still a great story. And while rates have ticked down a little bit because of these Fed rate drops, I just told you the numbers. 3.55 on a Fidelity money market account. I can't speak to some of the others. What's better, 5.85 or 3.55? Easy story for any client you're talking to. I talked about those replacements a little bit ago, folks, and a great product to replace annuities with is this Revel 1 Endurus 10 bonus. Revel 1's a little bit new on the scene. They're kind of a startup with annuities, if you will. They got a ton of money behind them. They're the old Pagonia Life that was out of Michigan. And because of that reason, they're in 48 states right away, right out of the gate. This has just been a very good product for replacing annuity business. That idea I just gave you by looking at your clients' statements and seeing if you can get them in a better position. 16% premium bonus. No fee on that. 10-year FIA. You could do a 2.75% fixed rate. That could get your client 18.75 year one, and a 6.5% S&P cap. Remember I said a little bit ago that I'm looking at some of these statements from annuities sold in the year 2020 or 2021, and they've got S&P caps at 3.5%, 4%. If you can move the client to a product like this, you're putting them in a better position to grow. 6.5% cap on top of a 16% premium bonus. If that annuity you're replacing is a 6% surrender charge, you're getting your client 10% out of the gate, right? Because of that 16% premium bonus. And then you're giving them a better opportunity to grow in the future as well. Win for the client, win for the agent. And look, they can replace an annuity that is only 1 year old. The only company I know of that can do something like that. Let's talk about clients over 80. I like to give different ideas here. So you have a client over 80, just working with an agent on something like this. The Exonic Trailhead FIA product, guys. Look at that S&P cap, 10.75%. This is an A- rated carrier. Their fixed rate is dropping a little bit after the Fed announcement. It's going from 5.15 to 5.05. Still an excellent fixed rate that can guarantee your clients they're going to get 5.05% in that first year. They have 3 index options guaranteed for the entire term. So if you're thinking to yourself, Chris, who in the world is Exonic Life? They haven't been around. There's no renewal rate history. Well, if you don't like that, they have 3 index options that are guaranteed for the entire term. Meaning if it has a 100% participation rate, it's going to remain a 100% participation rate for the entire 10 years that you own the annuity, or 5 years or 7, which one you select. That can put a little peace of mind there for your client. But the big reason this product is great for clients over the age of 80, there is no commission reduction up to the age of 89. No commission reduction up to age 89. The agent I was talking to had an 82-year-old client. He just wants to pass money on to his heirs. He doesn't want to touch it, just wants it to grow, put it somewhere safe, somewhere he can list the beneficiary. At 82, he's not getting life insurance, folks. But he can put his money into this exotic product. It can grow with a 10.75% S&P cap. You get all the downside protection of an annuity. And guess what? The agent's getting a full commission up to age 89 that does not reduce. What a story. Exonic should be your go-to carrier for MIGAs or FIAs for clients over 81. Absolutely. It's a great story to tell. And then, Bill, I want to pause real fast because I'm kind of flying through things. Are we getting any questions or anything I can answer here before we go into this these last two ideas that I have?
I think we are all set, Chris. What we'll do is right when we wrap up at the end, we'll give a few minutes, but I think we got everyone covered so far.
Okay, that sounds good.
Yeah.
Folks,
I
want to
appreciate
take
it.
Oh, absolutely. I want to take a second to talk about this product. Now, I did talk a bit about this product last time. Josh talked a little bit about a product that has a 4% per year for 10 years. That's this one right here, Equitrust Smart Boost Index product. Look at this top line for me. No fee, built-in 40% boost. Notice they're not calling it a premium bonus. We'll get into that a little bit here in the moment, but it's a 40% boost. Clients are guaranteed a 40% return vested at 4% annually over 10 years, with the potential for even more growth based on performance of the S&P. And the S&P caps and par rates look phenomenal. 8% S&P 500 cap. 50% S&P 500 participation rate. That should say 500. 50% par rate to the S&P. Those are outstanding numbers. How many of you, more of a rhetorical question because you're all on mute, how many of you have seen these premium bonuses out there at 20% or 23%? And guess what? They have a 95 basis point charge per year to the client in order to get that large premium bonus. Not here. And I think Equitrust is doing a smart system to be able to get clients a 40% boost by doing 4% annually over 10 years. Guys, what have we always said in this industry? 0 is your hero. Well, what if 4% is your hero every year for the first 10 years of this policy? You can't do worse than that. What an outstanding story for your clients. What if you have that client that's like, you know, Chris, I bought an annuity and it didn't grow at all. It didn't do anything. My agent put me in one of these low volatility par indexes that's proprietary to said carrier, and it grew at 1.1% per year, and it was awful. Okay. What if I told you there's a product that will guarantee you 40% growth no matter what? Your $100,000 will turn into $140,000 no matter what. You won't take any losses in the market. Oh, and by the way, it works directly with the S&P 500. 8% cap, 50% par to the S&P 500 with that potential for growth. Let me show you how that works. Then you pull out an illustration. And in this example, we have a 65-year-old with 100K. That boost is going to be 40K. This is your guaranteed page. If you've ever looked at a fixed index annuity, every fixed index annuity illustration has a guaranteed page and a non-guaranteed page. This is on the guaranteed page. So you can right away focus on that with your client and say, listen, let's just look at this accumulation value. This is assuming 0 growth. Nothing happens in the index. Does that ever happen with the S&P where you have absolutely 0 growth? No, it does not. Or over 10 years, especially. That's more what I'm referring to. Over a 10-year period, do you see 0 growth? Absolutely not. So here we have $100,000, and notice there's no growth happening to the index. No growth happening to the index. But in year 10, That's a guaranteed $140,000 that your client can walk away with right there. See that cash surrender value? Guaranteed $140,000. Let's say the worst things in the world happened, $140,000 right there for your client. It's an amazing story. Let's jump over here to see some growth. Now, we just put 100% into the 50% participation rate. I'm going to pull out my little spotlight here. So now you have that $100,000 going in. It's getting the $40,000 boost. But with the 50% par rate, looking at the most recent 10-year period, let's go to year 10. That $100,000 is $201,987. What an amazing story. The worst you could do on this is $140,000. But now with the par rate of 50% to the S&P, you're looking at $201,987 in there based on the most recent 10-year period performance. Folks, what a great conversation to have with someone. Maybe someone unsure about annuities, someone who wants some guarantees tied with their fixed indexed annuity. Maybe your client is a person who loves MYGAs, has never jumped into FIAs. This could be a reason for them to do so. Or maybe, like I said, they were burned by an annuity sold by a bad agent, not you guys, who got them into a low volatility index that performed nothing, and they want some guarantees alongside with it, with that downside protection growth. This is a great option for you and a great story to tell, and gives you a nice illustration to be able to do so. A lot of reasons to use this. I just want to cover this. Top tier guaranteed accumulation, like you said, market loss recovery strategy right there. I mean, let's say they have had losses in the market. I hope not. The market's doing fantastic, but it does happen. Legacy. So 40%. I've said to you guys that your clients have a 40% boost after 10 years. But with the death benefit, it's actually a day one 40% boost to the death benefit. Day one. You have an older client and not so great health, day one 40% boost to the death benefit. Let me see if it shows that here. Yeah, right there. Day one, it's 140. So with zero growth, guaranteed $100,000 is 140 after 10 years in the accumulation value. But the death benefit, 140,000 day one. Now, the trick is you have to take that over 60 months. So that's 5 equal annual payments. You can receive that day one boost. But regardless, maybe that's good for a beneficiary to not get a full lump sum right away. You can get it over 5 equal annual payments. It's a great benefit. It's a day one 40% boost to the death benefit. Another fantastic story with this product. And then Roth IRA conversions. This is what I want to end on, guys. I'm going to take 5 minutes on this here. Roth IRA conversions. So this is a great solution. I'm very curious how many folks on this call are doing the Roth conversion story. This has been the hit story of 2025 and a big reason why you're seeing that jump in annuity sales. And products like this are part of the reason why, but not the whole story. And that's what I want to go into. So look at their writing here. The 40% boost can offset your client's federal income tax liability for even the highest 37% bracket. So if you tell a client, hey, are you familiar with Roth IRAs? Well, what's the benefit of Roth IRAs? After 5 years, your client can take the money tax-free, right? Including the gains. What does qualified money do, folks? If you have qualified money in a 401k or an IRA, that entire amount is taxable when you take distributions. Or if you take the full lump sum, the whole amount is taxable. But with a Roth IRA, if you put money into a Roth, you have to pay the taxes on that qualified money, move it to the Roth. After 5 years, you can take the principal and the gains of a Roth IRA tax-free. That's the big benefit of a Roth, right? I don't think I'm telling most of you something you don't know. But what a lot of agents are doing is they're telling clients, hey, take your qualified money, put it into this product here, or take any amount of money that you have, put it into an annuity with a premium bonus. And that premium bonus is going to offset the taxable hit that you're going to have from pulling out your qualified money, or for converting your qualified money to a Roth IRA, right? So if you're in a 20% tax bracket, you can get an annuity with a 20% premium bonus that'll offset that taxable hit. Well, that's certainly one way to sell and talk about Roth IRAs. That's been a big strategy for all of 2025. But there are other ways that you can talk about these as well. And that's what I want to get into with Roth conversions. Folks, again, you can talk to clients about, hey, take your qualified money, pay the taxes on it, and then move it to a Roth IRA. That's been the big conversation. And premium bonuses help offset those taxes. But there are some companies out there, and they don't market this too much, that do something really impressive. They create mirrored contracts for partial Roth conversions. Mirrored contracts for partial Roth conversions. And only a few select companies are really doing this strategy, doing it well, and marketing it well at the same time. So what does that mean exactly? Let's take a look at this chart. And I'll just name a couple carriers that are doing this. Equitrust is one, Lincoln Financial is one. They do a great job with this type of program as well. Top line, systematically convert an IRA to a Roth IRA with the power to select when and how much to convert. So if you're a client, you get to select when and how much to convert. If you're an agent, you're getting the lump sum right away. Let's break it down real fast. We're going to take a $100,000 IRA annuity. So your client has $100,000 sitting in a 401k. And they say to me, Coach Chris, I want to convert this money to a Roth. I want to have those tax benefits of a Roth. So they have $100,000 of qualified money. My question to them would be, do you really want a $100,000 taxable hit? Because you're going to have to pay taxes on withdrawing $100,000 from your 401k or IRA. Most clients are going to say, no, I do not want that big of a taxable hit to happen to me. So how can you, all the agents on this call, help your client in this situation? You move it to an annuity that does mirrored contracts. Let's look at number one. You take that client's $100,000 and put it into the original contract, which is really just a fixed index annuity with Equitrust or with Lincoln, whoever. They create a mirrored contract. Number two, the original IRA is converted to a Roth over 5 years. So now your client gets to decide, okay, I'm going to move $20,000 into the Roth. Now their taxable hit is $20,000, right? $20,000 added to their taxable hit. So instead of 100, you've reduced it down to 20. After 5 years, the Roth conversion is complete, excluding any earned interest. And now that mirrored Roth IRA contract has all the tax benefits of a Roth IRA, and you've reduced that client's taxable hit over 5 years instead of one giant taxable hit in year one. Once again, very few carriers are doing this mirrored contracting idea. But what's the huge benefit for your client here? Let's just kind of wrap it up. The huge benefit for your client is that they don't have to have a huge taxable hit by taking their $100,000 and dropping it into a Roth. They get to decide in this mirrored contract when and how much to convert. Now, what's the benefit for you, the agent? Instead of your client saying, hey, Mr. Agent, I'm going to give you $20,000 a year for 5 years. Well, maybe they won't do that, right? With the mirrored contract, you get that full $100,000 annuity sale right then and there. It's an amazing concept. These carriers have FAQs and pieces that talk all about this, and I know the folks at Levinson & Associates can provide even more detail on how to help your clients with Roth IRAs. Let me just tell you, when I send an email out to clients about Roth IRAs, I get more hits than ever. So absolutely, absolutely take advantage of this conversation, and just know that there are a few companies out there that do this mirrored contract idea. Folks, as always, though, I want to wrap this up here. Appreciate everyone's time. We talked about a lot of stuff, some higher level stuff as well this time, but there are still just 5 huge benefits to fixed annuities. You should know this, that you put down on a bar napkin: liquidity, growth potential, principal security, that guaranteed lifetime income, and of course, the benefit of tax deferral for your clients. I hope you guys keep those in mind. Remember those anytime somebody asks you what kind of benefits there are with a fixed annuity. And of course, happy selling out there. Bill, let me know, guys, if there's any questions that I can help pose to the audience here.
That was awesome, Chris, as always. So, and just so everyone knows, we're doing this every single quarter for the last few years with Coach Chris. So again, you'll see Q1 webinar training coming up in early 26. So Chris, thank you again. I have just a few other things, about 5 to 8 minutes left, and we'll get everyone out on time and do our webinar question of the day for our prize, our giveaway, Apple AirPods. So, and then any questions, yes, call in. And if we need to get Chris involved on a conference call or even through an email, we can do that as well. Okay. He's always there for us. So, Chris, once again, thank you. Happy holidays to you and your family. I'm going to jump in and get this wrapped up. Okay. How to get started. So, you're an agent sitting there right now, right? Maybe you're live, maybe this is 2 weeks from now, whatever it is, and you're saying, wow, this is great, lots of value here, the training is second to none. I want to take advantage of maybe the new discounted E&O plan, right, that now covers B-rated or better annuity carriers at $395 a year. You can even pay monthly now. So the co-op discounted lead program, annuity rate watch, right, your own quoting engine that shows riders and living benefits, for example. Maybe it's we have 2 complementary annuity e-app platforms, the only IMO in the country where you as the agent get to choose from a firm for annuity or Firelight, both baked into our website, single sign-on, which means when you put in your info just once to get in the website, you click another button and you are in either platform. So all of this complimentary. Once again, you want to get started. Yes, you need at least 1 active contract with us. So everything is in front of you. You just follow the yellow arrows. And then once again, you know, we have a separate new business contracting and then the marketing team on the annuity side. So reach out anytime and we'll get you up and running 100%. Let's keep moving forward. I want to talk about a few other things, and then we'll do our giveaway at the end. We have, like I said, Apple AirPods and our prospecting book real fast. So if you're newer in the annuity side, right, or maybe you're a seasoned veteran, great. We have complimentary training dashboards for you all, okay? It doesn't matter your experience level. The 101 course is complimentary, and then it comes with a sales professional certificate when you completed the course. A lot of agents frame this for their office. They take a picture image for their website. They do all the above, but make sure you go through the course because it's very, very helpful for you, especially if you're working on your first app or want to get more involved. And then let's go to the next slide here. What I want to show everyone is for the more experienced annuity agent, right? Coach Charles jumped in with an 8-hour course just for Levinson's agents. Okay, so this is amazing. It's also part of our annuity dashboard training. Look at it like a part 2. We have the 101 for the rookie or greener agents, and then we have the part 2 for the more experienced annuity agents. And he takes you through everything A to Z, okay, with agents live on this course, okay, and then he shows his famous napkin presentation, which I love. It's all about the accumulation or income, right? And that's the famous question that leads to the sale every single time. So you're going to love, love, love the 8-hour, 8-week course from Charles. Okay, let's keep moving forward. By the way, all of these requests will be in the thank you email if you want to get started. This is our discounted co-op annuity mailer program. So $685 for a 1,000-piece drop. What I love about this, number one, the average rate of return, 1%. Okay, obviously it depends on where the mail drop is. Number 2, the name and return address goes back to you. So you're not depending on a third party, right, to send you your leads. So I love this. Also, we have our own incentive program that gives you a chance to let Levinson pay for your mail or drop. Okay, it doesn't cost you a penny. Just like we do with the orphan leads, right? A minimum of $10,000 a premium, you get free orphan leads. And by the way, those orphans are great because it could lead to maybe a conversion, right? Maybe from term to permanent, and there's a $10,000 commission. You're now the agent of record. It could be an annuity question, right? Or maybe you pivot. So you got to take advantage of this stuff that we offer. That's my point here I want to drive home. Let's keep moving forward. I know I want to make sure we get everyone out on time. We're running a little behind. We've got about 3-4 minutes left. So the only IMO in the country today that offers our agents 2 complimentary e-application platforms. So on the left-hand side, Firelight, we've been working on for the last couple months. We finally went live today. It's in our production room, so we're testing everything now. We should be up and running by, I would say, tomorrow or Monday, the latest. So we'll have Firelight on the left side and then a firm for Annuity on the right side. So you get to pick, right? They're all baked in to the website with your same single sign-on access. So very simple. Literally click, and go. You're off to the races. Let's keep moving forward. What I want to do next is talk about our newsletter. So this goes out every other week, and we include all of the life and annuity carriers, the health companies now, the supplemental products. Everything is at your fingertips in just a few easy to click images. We make it so simple for you, so there's no excuse. You don't have to go on 150 different websites to see what's hot, what's not, look at different insurance newsnet articles. Everything is going to be here. Okay? Again, simple is the name of the game at Levinson. Let's keep moving forward. 2 social media posts that are performing great. Remember how Chris mentioned, right? You talk about income, right? Accumulation, guarantees, living benefits, a death benefit, long-term care, all in an annuity. Okay, that's insane. So what do you have to do? You got to get the word out. Okay, and these are just 2 examples. Almost 500 leads came out of this. And you say, Bill, what do you mean 500 leads? Very easy. Okay, on the one on the right, 372 shares. The one on the left, 157 likes. You need to reach out to every person that liked your post. Why? Because obviously they're interested. They probably have questions. That's why they clicked. So you got to put the content out there, right? And my recommendation is at least 2 to 3 times a week, you have to post something, okay? And we have a library of material. We can even co-brand for you, okay, for free. So there's no excuse. You got to get this stuff out. Let's keep moving. So now you heard it from Coach Chris. You heard it from me. You heard it from Josh. Now, what about listening to an agent that's out in the trenches making it happen, right? 100% from the annuity space. And that's Ron Smith, folks. Okay? This is a once in a lifetime episode for you all. If you want to learn how to sell annuities, you want to get inspired, you want to be motivated, okay, in the annuity world, I'm telling you, this is the 1 hour you need to listen to for free. Okay, episode 63 with Ron Smith. It was one of my favorites. And what I love about it, 100% annuity focus. Let's keep moving forward. I want to talk about, by the way, just a slide left, and then we'll put a bow on this. Upcoming training events. Usually this is full, but it's the end of the year. So this is our final annuity training. And then we have one more webinar where we're taking everything hot, what's not, and we're putting all of this inside a 1 hour webinar that you cannot miss on the 18th. Okay, so make sure you write that down. That'll be the final webinar of the year. And then we'll move right now to our Positive Tuesday quote and my question of the day. So our quote, I love this on the left-hand side. There's always a reason for everything, good or bad, right? Here's my quote. No matter what I'm going through, good or bad, I will always thank my higher power. What's the reason behind it, right? What am I supposed to learn here? There's got to be something, right? You got to go under the covers sometimes, dig a little deeper, figure it out, okay? My main point here, Positive Tuesday, what does it mean? Nothing. It's just a way that we market and brand ourselves through social media and online to our agents. You should be doing the same thing, right? You don't have to listen to what I say. Watch what we do. Proof is in the pudding, okay? We built this company from just a couple hundred agents to over 24,000 with the internet, with a website, with social media. And I know you could do the same, okay? All right, you get my point. Question of the day, get your little fingers on the keyboard. You got to be quick and you got to be accurate and correct. Question is, we have 4 Levinson employees that make up our annuity department. Tell me the 4 names. You can even do first name only. We'll make it easy. What are the 4 names I mentioned a couple times on this training that make up our annuity department? There were 4 people, 2 in marketing, 1 in contracting, 1 in new business. 4 names that make up our annuity department. Andrew's going to tell us who was first and who was correct. We got Apple AirPods and the IUL prospecting book. Goes to the winner. By the way, everyone could be a winner, because if you go on our Facebook page or our Google reviews link, okay, leave a few words and you get to pick either the IUL prospecting book. We have the Mary Reed's book. Whatever you decide, there's 4 different versions, so complimentary. Andrew, who was first? Who was correct?
We have a winner, Jonathan C. Jonathan C.
Jonathan C. The 4 names that make up our annuity department is Josh, RJ, Michelle, and Ashley K. With that said, let's have a great rest of your Thursday, great week, great weekend, happy holidays. Make sure you're on our final webinar on the 18th. And if you need anything, never hesitate to call or email. We will get back to you same day, typically within an hour, okay, if not real time. Thanks again, everyone. Great selling.